Hi, everybody, and welcome to the latest episode of the 7 Investing podcast. Pretty exciting if you're on video. You can see a preview. It's not just Krzysztof and myself this week. We're joined by a very special guest, Krishna Bahirwani. Krishna is a framework coach and an investor from India, but crucially, he's also the founder of Indians Invest Globally, a community dedicated to investors with global portfolios. I actually met Krishna about a year ago because I guested in one of his clubhouse discussions with his Indians Invest Globally colleagues. I think you've got over 1,200 members now.
Yeah.
And then the other reason we wanted to chat to you today is you're also part of the core team at Delhi Investors Association, which is an investor body with over 20,000 investors as members. You've been a speaker at the 2022 Investing Accelerator Summit. You've also spoken at public and private investor meets across the country. And basically, you're just a passionate believer in the India growth story with a keen eye on global opportunities. And I think that is going to be fascinating for 7 Investing podcast listeners and YouTube watchers, not just today, but in 2 weeks' time. We're breaking this into 2 episodes so we can have a really deep, rich conversation about investing in India. I'm pumped. Krzysztof, how are you feeling?
Oh, I'm so excited. I studied India back in the college days, and I think it's just one of the most fascinating places in the world. And obviously, for reasons that will probably become very clear, the very best place to look toward investing opportunities going forward, given what's happening with China. In other words, a decline there with a rise in India. But I'm getting ahead of myself. I can't wait for this conversation.
Well, Krishna, welcome to the podcast.
Thanks, Luke. I'm so happy to be here.
So I think I mentioned we're going to probably split this into 2 episodes because we don't want to constrain the conversation we're going to have. Today, we'll focus more on kind of the big picture, India's demographics, what the local retail investor mindset's like, and also think a little bit about the impact of Indian government policies on the investing market. And then when we come back in 2 weeks' time, we're going to pick up on some topics such as what's it like to be an investor in India, kind of challenges faced. Maybe really exciting one I'm very interested in is what's the future of investing in India? And then big teaser for part 2. Krishna's going to share some interesting investing sectors in India, hot topics, hot areas and sectors to look at if you're considering, as an international investor, investing in this exciting market. Well, I'm looking forward to part 1. Why don't we crack on though and get started? And maybe just to kick us off, you could just tell us a bit more about yourself, Krishna, and also Indians Invest Globally.
Sure. I became an investor in 2016. I used to be a journalist before this. And that exposed me to a lot of information on a day-to-day basis. And, seeing news go through the newsroom, you're sort of always up to date on what's happening. And that gives you unique insight into the country. And it was then that I decided to start saving up and investing for myself. I mean, I couldn't have imagined that I'd be sitting here, a couple of years later. But it's especially since I have no traditional background in finance. Like a lot of other Indians, I pursued IT right up until I dropped out to join a newspaper. At first as an intern, and then I was given my own department, and I set up my own section within the paper. It's been a long journey since then, and as I've invested, I've grown as an investor, and now I know that this is a huge part of my identity, and this is a huge part of, what I want to do. As far as Indians Invest Globally goes, I've always been somebody who's had a global mindset, and right around during the pandemic, what happened was the cost to invest internationally went down substantially in India. There was an influx of different companies allowing you, to be able to invest abroad, sort of like the Robin Hood moment in the US. We had it here with international investing.
And did that have all of the downside and complexity of Robinhood specifically? They didn't build a great name for themselves with some of their policies and their approach to the way they navigated markets.
Yeah, I think that there were a bunch of complexities here as well, because Generally, international investing or doing anything that involves complex flows of money in India is generally a cumbersome process. A lot of the while the costs came down, some of the investing, uh, as in the transfer of funds, still had to be done manually, and the fees are pretty high. In terms of transferring your funds internationally, especially when you look at it compared to what people would want to be able to invest. So while we did get like zero brokerage and close to zero brokerage kind of accounts, transferring to the US still had all of its traditional fees. So while it did become something that was a lot more accessible than it used to be before, it still wasn't something that the everyday investor could participate in. It's still a very like selected group of higher net worth individuals who could, uh, you know, um, go and explore international investment.
So that the market's mostly made up of all these rich ex-IT graduates who are ploughing their earnings back into stock
Yeah,
market.
I mean, the markets are pretty diverse, and they're also pretty young. Because when you look at in the Indian stock market as a whole, I think we have about 110 million investors right now in India. This is in the Indian stock market, and I think it would be about 140 million in the mutual fund industry. So you have more people in India investing in mutual funds than in direct stocks or ETFs. ETFs are far less popular here than mutual funds are. Um, so, but this 110 million number a decade ago would have been something like 20-30 million. So it's um, gone up dramatically. I think even the last year number, November to November, which would be 2021 to 2022, I think was 34% plus kind of growth in terms of the number of investment accounts, which we call demat accounts. So it's a young market in that you get a pretty diverse sort of investor profile. Another very interesting fact about India is roughly only 5% of Indian assets are in equity. Um, so you have 3.5% in cash and 4.8% roughly in equity. So it's still a very new asset class for Indians. I think gold is like three times that, and I know property is 10 times that.
I've got a couple of very close Indian friends who are sort of British-born
Mm.
Indians, but we always joke with my friend Dunya that her riches are in gold, and she's going to sink a safe into a garage and kind of bury it physically. She's a bit of a doomer when it comes to what's happening in the world. Gold is popular culturally as an investment.
That's changing with this current generation. Like the average age of an Indian in India right now is about 28 years. I'm about a year and a half, 2 years older than that. A lot of the investors coming in right now are my age, and their disposable incomes are rising. They're also the people that make up the majority of the workforce. So disposable incomes are rising. It's all coming together into a really interesting picture. Just to like simplify the demographics of India, you could look at it as um, you know 3 or 5 different Indias, because when you look at the top 20% of India, you're looking at families making around $15,000, which would be your top 20%, and the top 2% or top 1% would be like double that, and you have various sections of of society which are sort of like different Indias, because India's per capita income is about $2,000. Over the next 7 or 8 years, that's going to more than double to about $5,000.
Krishna, I
I
had
have
an
no
idea
idea,
because
honestly.
you started talking about demographics. I just want to set the table up in the broad picture, just very, very broad. What I want to say is that from an investing standpoint, there's an adage that says, look where the demographics are. The demographics rule everything. And what that means, in a very general, broad sense, is that when you have an aging population or a declining population, you basically have fewer workers or less capital in the system. As an easy example, take a look at Japan. And in the 80s, 90s, there was a rise in its technological know-how, but as the population aged and people were having fewer and fewer kids, you look at it now, and there's this, in a sense, decline in opportunity. Same kind of thing is seeming to happen to China, that the population is getting older. Meanwhile, as I'm sure Krishna you'll explain with great depth and firsthand experience, India is the opposite situation. You have a very young population that is booming. And so from an investment standpoint, that's kind of like just a great place to start, demographics.
Yeah, absolutely. Like the average age of an Indian right now is 28 and a half years. And if like you look back to your own life, that's probably the time where you really started to make money. You had put in all the time, the work, the energy into sort of building yourself, and that was sort of the time where you started to make money. Also, what's really interesting is um, the demographics in India in terms of the working age population hasn't even peaked yet. It's the best that it's ever been right now, but it's expected that it would peak around 2030, 2031, with about 69 to 70% of the population being in the workforce, which is an absolutely staggering number. This is a population that's hungry to consume. They've lived on $2,000 per capita income, which, if you take by purchasing power parity terms, is equivalent to like $9,000 US in terms of living standard. And as this amount sort of doubles, a little more than doubles in the next 7 or 8 years, that's a huge amount of like disposable income that's going to come online, and that's also going to dictate the investing opportunities in India in a really really big way. um, just to like paint you guys a little bit of a picture of the last 50 years of the Indian market, the really big winners have been, consumer staple companies, export companies, and infrastructure companies. With the exception of one gold retailer, gold jewelry retailer. Like we joked about how gold is a big aspect, in India. Um, 3 times the amount of money that's in equity is in gold. Um, that is a that is the only sort of segment of consumer discretionary that's actually done really well over the last 50 years, which means the whole gamut is of discretionary consumption is still open for Indians, to be able to spend on. And I think that makes it a really really interesting economy. India, like the US, is a 60% consumer driven economy, unlike China. So a lot of the growth is going to be driven by people's consumption.
And I suppose as people become richer and you have this emerging middle class, would you say that there'll be more focus or opportunity for consumer discretionary firms and like a almost startup ecosystem?
Absolutely. Along with the middle class, the wealthy population in India is going to 5x in the next 7 years, which is insane. Like when you think about it, the number of people earning the equivalent of $35,000 is going to 5x in the next 7 years. I'm not exactly sure if this is on purchasing power parity terms or if it's on, uh, you know, just taking GDP as it is. But either way, that's like a huge boost to the upper echelon of consumption, and you can see that in like the prices of certain hotel rooms in India. If you wanted a hotel room right now in Mumbai at one of the top three hotels, it would cost you about 400 to 450, $500 US for a standard room, which is what you would expect in New York or, LA or San Francisco. India is a very, very big country, and therefore, you can have like almost like many small countries and small economies within it. So while the middle class story is the huge story, you also got a parallel affluent class story sort of playing out.
And I suppose it's a tech savvy demographic. This sort of younger cohort of folk, and particularly like a lot of wealthy people coming out of the IT sector. That's a huge industry in India. Do you see technology firms as benefiting perhaps to a greater extent than some of their peers in more traditional industries?
It's a little complicated, because uh, the amount of competition and disruption in the tech firms is much higher. So as an investor or as an entrepreneur, you have to take that into consideration. The competition in the more capital intensive, the more traditional firms, you would say is comparatively lesser, and the scope for disruption is a lot lesser versus what it would be in the new age tech companies. Just to give you an illustration, I'm not invested in any of the high tech growth stocks in India, while that forms the primary segment of my international portfolio, because of how high the disruption is. And you could spend a really long time building something up, and then forget about like competition disrupting you. The government might disrupt you. You know,
Hmm.
in India right now, the government is building something called the India Stack, which is a sort of like a software layer to the entire country. So you've got tech-based authentication of people, which is the Aadhaar system. If you want any government benefits, you want to apply for any government schemes, government services, you just use this Aadhaar system, which is a lot like the US Social Security number, but this is a digital platform that connects to all sorts of other things like banking, investing, and so on. Just to give you an example, and you can tell me how it is in the US or in the UK, but you can open today an investment account using this India Stack in 30 minutes. Your entire authentication, paperwork, screening, approval is all done online, and you're ready to go in 30 minutes. When I talk to my friends abroad, they say that's insane, you know?
It's very impressive. I think the
Yeah.
UK are somewhat advanced. Maybe you couldn't do it in 30 minutes, but you could probably get there in under a day. But go on, Krzysztof,
Yeah.
tell us about how archaic the systems are in the US.
Oh, they're fantastic. I love waiting at the DMV line for 4 hours to get my license corrected that inverted my first and last name. So, so
Yeah.
that makes the U.S. seem like a third world country. Hey, Krishna, could I rewind, or maybe it's a segue? The thing that seems most impressive to me right now in terms of tech is the fact that India, according to my research, has now approximately 750 million users online, which is a huge shift in just the last couple of years. And to put that into perspective, that's you have China at about 1 billion, India 750 million, and then the US is somewhere around 270 million. So it's not even close. And I guess the question to you is that kind of world in which only a few years separates nearly 1 billion people from being not online to online, that has to have repercussions that are not accounted for yet in the global economy. How do you think of that?
Yeah, absolutely. So we had something in India known as the Geo moment, which was a moment, the telecom industry was sort of old and archaic, very little disruption. A gigabyte of data costed like, I don't know, $10-15 at that time. And for most of India, it was like not possible to access. And India, in that way, leapfrogged the computer generation. And I think a vast majority of the users that came online were mobile first. And all of this happened because Reliance, which is one of India's largest companies, decided to get into the telecom space. And just for the listeners to just clarify, there are two Reliance companies. There used to be a Reliance Communications, which was in the telecom space, but that's sort of shut down now. They're both owned by two different brothers. Um, the other brother decided to get into the telecom space, and he was the one who was into oil and petrochemicals before that, and made this absolutely insane sort of capex layout, and then came to the market. And today we have the cheapest data cost in the world, and we're unlikely to be like challenged in that segment, because he took data and he practically made it free. Like from $15 a gigabyte today, an average data plan on postpaid would give you like 2 gigabytes a day and would cost $15 a month. So like that's the level of productivity. So we've had a 60 times increase in how far our money goes in terms of buying data.
And I suppose a small aside on that topic, one of our colleagues, Anirban, was recently tweeting about the iPhone moment that seems to be happening in India now, where I think 2 Apple stores have recently been opened, and there seems to be a huge demand for Apple's products. I guess, the handsets themselves going hand in hand with this incredibly low data costs.
Yeah, yeah. Um, they sort of go hand in hand, and like I said, India is a high consumption country. You've got a lot of users who are actually in the affluent segment. Also, because like you pointed out, a lot of the people who are earning the money are in the tech industry, and therefore this would be something that they would enjoy spending their money on. This and real estate in Bangalore, which you can see in the prices of real estate in Bangalore. I expect that by the end of this decade, we should be, I think even Morgan Stanley said we should be somewhere around 900 million people that are online.
So we're starting to sort of touch on the topic of how investors think and their kind of backgrounds, I suppose, the sort of retail investor mindset. So maybe just to sort of broaden that question out a bit, and maybe we can start attacking it from a few different angles. You've told us a bit about who retail investors typically are. What's people's kind of risk appetite and the types of investing preferences they might have, and what sort of decision-making processes do people use when they're trying to determine where or how to invest?
We could bucket people in two different buckets to make it simpler. Okay, so you've got the population that's earning and investing, and you've got essentially people who have assets and they're transferring them to equity. Okay, so these are the two broad buckets because, like I said, the average age of an Indian is 28 years. So a lot of those people are earning their money right now. Um, Jobs are becoming increasingly more well paying as remote work takes off around the world. India is uniquely poised to take advantage of that because a lot of Indians speak English, and they speak English fluently, they understand English well, so they can take international jobs in the way that other East Asian countries may not have been able to. They're also well versed with outsourcing, as India is a big hub for outsourcing, uh, IT talent, customer service, things like that. So they are making more money than they used to before because it's still very, very, very cheap for international companies to outsource to India. And these investors, they have a higher risk appetite because they're younger, they're earlier on in their careers, and they're less worried about where they're going to end up because they have fewer responsibilities. And at the same time, you have this other segment of society which was traditionally living off bank deposits, because bank deposits in India used to have a really high interest rate. Even today, you can get around like 7.5, 8% on a bank deposit. So you have some part of that population that's coming into the equity markets, realizing that you know you can make a higher return and you pay a lower tax rate on your equity investments as opposed to your bank deposits. Your effective tax rate could be triple on your bank deposits as opposed to your equity investments. So that's driving a lot of investing there, and that's a very different kind of investing, very risk averse, primarily investing in consumer staples and banks, which are considered safer investments in India. So you've got two different sort of groups of people simultaneously entering the market for the first time.
And that is a very high interest rate you can get in a bank account. Is that a recent phenomena because of sort of inflation and those sort of macro events, or has it always been quite high?
So it's always been quite high. It did go a bit lower, during 2020. Uh, we reached about 5%, I think. I don't think it ever dipped below 5. So 5 would be 5 to 6% as a range, depending on which bank you sort of go for. Now that's between 7 and 8%. So the lowest we've ever had, I think, is between 5 and 6%.
It's really fascinating if you just think about, say, the S&P or some other big indexes. If you're just investing in indexes, you might expect to get 8 to 10% as an average year after year. If you could almost get that on a risk-free basis in a bank account, why would you invest at all?
Absolutely. So that's what kept a lot of people away from it. Also, we had a lot of the older generation experience this thing called the Harshad Mehta moment in India, where there was a big sort of stock market manipulation incident that happened in the 90s, and that scared an entire generation out of the market. Because I think after the aftermath of that whole thing led to a 50% drop in the index, which for a lot of people would be like, okay, we're never entering this space again, you know, especially if they were leveraged, if they didn't understand what they were doing well. So I think that kept a lot of people away from the market. 2008 kept a lot of people away from the market. And of course, interest rates were great outside, so there wasn't a reason to come into the market per se. I would also want to add one more thing, which is the awareness around real returns has increased. So, while you might be able to get 5-6% on a bank deposit, inflation adjusted, that could be 0%. So we have 4 to 6% is our what the RBI targets. Like the Fed targets 2%. We target between 4 to 6% in India. So the understanding of uh, real returns is started to increase in India, and therefore I think that's also influencing equity participation.
Yeah, and to tie that in with this connection of so many hundreds of millions of people to the internet, as technology gets more advanced and all the apps and the iPhone, I guess, becomes not commoditized but normalized, the ease of access to all this stuff that brokerages like Robinhood brought to bear, in a population that is young and comfortable with that technology, it seems to me just a massive, massive setup for people being comfortable with investing in a way that going from 0 to 100 basically in the span of a couple of years. Does that sound accurate?
Absolutely, I agree with you 100%. I wouldn't change a word.
Okay, awesome. Can I set up the topic of governmental policy? And I wanted to do that by thinking comparatively China compared to India. And I'm very ignorant about most of this stuff, so please correct any generalizations. But the way I sort of think about it now is that you have China, in terms of population, staggering over the rest of the world. And it changed the world. When China basically started to become a developed country, the entire world's global system and manufacturing processes changed. And that came with really serious downsides like climate change and pollution and all of that. But leave that aside for a second. But what's interesting about China is that we know they've walled themselves off predominantly. One, the great firewall of the internet. Most Chinese people are not participating in a global conversation. And from the English speaking perspective, Chinese is also a big barrier in terms of language and culture. Compared to India, now the world's most populous country, has policies that are almost the opposite of China's. And this is where you might provide some nuance for us. But one, there's no firewall, and there's English speakers. It just seems like India is the new giant that is not yet a giant, but the barriers that the previous giant has set up simply do not exist.
Yeah, absolutely. In a lot of ways, I think India is open to collaboration, and you can see that in the way that government policies are happening. India is very happy for international companies to come in to work here to collaborate with Indian companies to grow. Of course, they want India to grow as well, and Indian companies to grow as well. But they're not like in any way closed off to international companies, to international investment, and you can see that in foreign direct investment limits, which have been opened up, and they're allowing a lot of foreign investment in the country. And I think the government is constantly proactively thinking about in areas like technology, electronics, defense. How can we collaborate with our European peers, our American peers, and sort of grow together? Which is again a very very different approach from the approach taken in China. Um, like I was looking at the sectors that are closed off, to foreign investing, um, or to foreign direct investment, and I could only find two, which are like minuscule: the gambling sector and the cigarette sector. That's it. Everything else is like open to international investing. Of course, there are different limits depending on how sensitive those sectors are. The limits are lower. The more critical the infrastructure gets for the country, but stuff that's not so critical, in terms of the security or functioning of the country, those are a lot more open um, for foreign collaboration. So in that way, it's a very different economy.
Hey,
And
Krishna, you used the phrase the government. Can you tell us just a little bit more about Narendra Modi? My understanding is that he's extremely popular, more popular than maybe most political leaders, and I guess everything starts at the top. Can you give us some color about his vision for the country and what you see him doing and how he's shaping government?
Sure. So, just to give you another staggering stat, I think we were, I don't remember exactly what the rank was, but we were over, 100th rank in the ease of doing business ranking. And ever since he came, he made it his mission to sort of improve the ease of doing business ranking. Today we're about 63rd. Um, I'm not sure what the exact jump would be, but I think it's like 70 spaces in the time of 7 years or something, which is crazy. Like the kind of ambition that he has for the country is really really strong. I think one of the things that inspires the Indian people are really hardworking people, because as the per capita income being where it is, and the sheer size of the population, and India is a labor surplus country, so people generally have a working hard ethic. So when they see their prime minister, who first of all was has risen from absolute poverty. He was a tea seller. So tea seller to prime minister in itself is a huge, huge, huge story. From there, he's also someone who's really, really hardworking. He's constantly putting in effort, and people can see that effort on the ground. Arguably, the only comparable prime minister to him in the history of India was the prime minister that founded India. The first prime minister of India, Jawaharlal Nehru. And I wouldn't be surprised if during his tenure, he overtakes Jawaharlal Nehru in terms of his popularity. Uh, yeah, so he's someone who leads from the front. He's very unafraid, to take bold decisions. India was also a country that was traditionally plagued by corruption, where you would have politicians bringing in family members and things like that, and India being a socialist economy up to like 1991, they used to hand out certain things to family members and concerns of family members. So, a big thing that aids Narendra Modi's image is that he has no one to do that for. He has no family outside of his aging mother. I mean, he had a wife, but he sort of separated with her earlier on, and he doesn't have anyone to sort of be sort of corrupt for, and that aids his image a lot again in India, because they know that who's he going to steal the money for, right? And that makes people like a lot more enthusiastic. He's a very, very, very popular leader, and I don't see his popularity diminishing at all.
Interesting. We could go back and double click on that comment about the ease of doing business index, because that is a significant improvement. How? What kind of policies have the government enacted? Is it like sort of taking out bureaucracy, or what other things have
Yeah,
happened?
so that India Stack again is a big component in that. So because the Aadhaar system exists, in the middle he also went on this drive as far as like sanitation and opening bank accounts go. And again, I'm not sure about what the exact stats are, but like I think women bank accounts went from something like 40% to 90%. You know, what the India Stack does is it allows people who previously didn't have an identification document, to be able to get an identification document easily, to be able to use that to open a bank account really quickly. All direct benefit transfers don't happen through checks; they all happen electronically. You qualify for various schemes using the India Stack. So it's a very pinpointed effort to eliminating middlemen. And also I think culture starts at the top, and sending out a very strong message that we want efficiency. To just give you an example, India again had a really bad reputation with its politicians, but today our railway minister is a Warwick graduate. If you told someone in India 10 years ago that's going to happen, they would have been like, that's impossible, that and it's a lateral entry into politics. That he's not a career politician, but there's so much political power and capital that the prime minister has built up, that today he can go out and bring someone into the government, give them a cabinet level position, and they can really do the work. Arguably one of India's most popular politicians right now, Mr. Jaishankar, the external affairs minister, he was not a career politician. He was brought in from the civil services in a lateral entry. Today, I don't think if he stands for an election, there would be any doubt in anyone's mind to like that he's going to win. But to be able to bring such people in takes a lot of power and political capital, which I think he's spending really well.
And I guess a little tongue in cheek, but genuinely, on behalf of all British people, if I could thank you and your neighbours in Pakistan, because your people who are of Indian origin are now running the UK, running Scotland, our fantastic mayor of London as well. So you're helping rescue us from this absolute disaster we've created for ourselves politically over the last year or so.
Oh, yeah. It is interesting from the US centric perspective that there's some US companies, you might have heard of them, that have Indian CEOs at the top. Little pebbles like Google and Microsoft.
Yeah.
But I also, I keep coming back to this difference between China and India, and it seems like there's just a more collaborative emergent possibility between the US and India than there could ever possibly be with the US and China, in part because of the vastly different way that they think of themselves in terms of government structure. That China will actually set up espionage and totalitarian ways of controlling everything as in an adversarial nature. We know this with the TikTok saga, right?
Yeah.
Compared to India seems to be inviting collaboration. And if I reverse engineer things, and I start with someone like Tim Cook, who probably knows the world's manufacturing cadence better than anyone on the planet, and he's now devoting so much time and effort into establishing a real genuine presence in India. I believe some Apple stores were recently opened. It started with 1% of iPhones being made. Now I think it's up to 7% with a goal of maybe 25%. All of a sudden, India seems like a legit partner, and you have this thing called India America, right? Where it just makes so much sense to me. Am I missing something?
No, you're absolutely right. But there are a few crucial government policies as well that have, played a role. As an investor, personally, the one that excites me the most is this thing called the production-linked incentive scheme. Okay, and it caters to specific sectors like automobiles, specialty chemicals, pharmaceuticals, electronics, IT hardware, which India wants to become stronger in. And what the government is doing is they're giving a 5% incentive to companies if they hit certain benchmarks in terms of efficiency and scale. They need to hit these benchmarks in terms of volumes in a time bound manner, and they can get up to 5% of a benefit. The government is investing in terms of their outlay about $25.9 billion in this, which means that in 5 to 6 years they will produce manufacturing in these key targeted sectors of about $520 billion. The government is extremely pinpointed in the way that they work. You can see it in this policy. And this is built to create an ecosystem for all of these things. So it becomes a lot easier for an Apple to move manufacturing here if every other electronic component is getting that incentive to be able to develop, so that we can bridge the gap between what China has and what we need in terms of economies of scale to be able to be a valid contributor to the global market.
Fascinating, Krishna. Hey, I think we're coming up on time for our first part of this conversation, but we'd love to pick up with you in 2 weeks' time. I hope our listeners can hold their breath. So we've covered some interesting topics today, but when we come back, probably the headline part of this conversation for me, really to understand a bit more about the future of investing in India. And I think you're going to share some interesting segments and sectors that you think are particularly interesting right now in the country. Really looking forward to getting to that conversation. But for now, let's bring part one to a close. Say a quick thank you. If our listeners for part one would like to read more of your work or perhaps join Indians Invest Globally, where could they find you on the internet?
I think the best place is Twitter, @Bahirwani Krish, which is BAHIRWANI KRISH.
Superb, and I'll put a link to that in the show notes. Well, on behalf of Krzysztof and myself, thanks so much for your time in this first part of our fascinating conversation.